the same thing you do with single family, you can do with storage. I ended up getting this facility under contract for $400,000 and ended up selling it for $550,000. So I received a wire for $150,000 on this one deal. And it put things in perspective. Like back in my wholesaling days, I would have had to have done 8 to 9 deals to realize what I experienced on this one particular deal. And guys, I am not special. This is anything that anybody can do. I just took what I've learned in the single family space and I applied it to storage. Guys, what I'm going to talk to you about today is how you can find, fund, and profit from self-storage. Here's the kicker: without using any of your own money or needing any experience. So my guess is I am talking to primarily most of you are single family investors, I would assume. I don't want you to tune out or disconnect because this is not your asset class. One thing that you're going to hear in this talk is that when I got into storage 3.5 years ago, I didn't know that a lot of the skills that I acquired as a wholesaler and single family investor for 16 years were going to transfer over into storage so easily. I want you to hear this presentation and filter through, how can I apply what I'm already doing with tools like DealMachine, how you're generating leads. All you have to do is maybe shift a little bit and you can now start to generate the same types of leads, but in the self-storage asset class. And as you're about to see, the pie just gets a little bit bigger and it's got a lot of benefits that in my experience, I didn't necessarily experience with the single family business. So when I started to research the different asset classes, but I kept coming across quotes like this: Sam Zell, self-storage is the only real estate asset class that performs well in good times and bad. Storage kept popping up as one of the most recession-resistant asset classes. And there was case study after case study of what facilities were doing in good markets and in bad markets. So when Matt told me, hey, you have an opportunity to present for about half an hour, I really had to cut back my slides because I have about 5 of these slides that share why I believe storage is like literally one of the best asset classes. But I tried to narrow it down to like some of the key ones. Storage is a simple business to manage. Like, think about what we're doing. We're essentially renting space to people. It's a very simple business to manage. In commercial real estate, the value of the asset is determined by the income that that asset spits out, essentially what's called the net operating income. Well, in storage, we get to do something called forced appreciation. In other words, by raising the rates, by implementing certain value add components, we get to increase the net operating income of the facility. And by doing so, that has a multiple effect on the value of the storage facility. So with single family, I never found that I had that opportunity to necessarily force appreciation, right? Like, rates are what they are. And yeah, you might be able to get aggressive here and there. But what I've discovered with storage is that you have multiple opportunities to force the appreciation and increase the overall cash flow and value of the facility. One of the common myths that I hear from people is that they have this limiting belief that they need to have a bunch of money in their bank account to get involved with storage and buy these commercial assets. And the 3 deals that I just showed you, I have yet to use 1 penny of my own money to get involved in these transactions. So if you walk away from this talk and this presentation just with an expanded thinking, a mindset that every single person in this business can acquire a storage facility, that's going to be gold, right? Just expanding your mindset that you don't need to necessarily have all this money to get involved in this business. Here's case study number 1. How we went from $0 to $4,500, and actually that number is a little bit higher now, in net cash flow without having to put any of our own money into this deal. This particular property in Amelia Island came from a direct mail campaign, right? So I'm sure a lot of you do direct mail. I think I just heard Steve talk about how he does direct mail. This storage facility came from a mom and pop storage owner who bought the facility back in 2006, and yet they had never raised the rental rates. That is what many mom and pop storage owner operators do, is they don't really treat it like a business and they don't push the rates. Now, why is that an opportunity for you and I? Because remember what I talked about commercial real estate and storage. We get to increase the value by value add components. One of those is raising the rates. Well, this particular facility, they hadn't raised the rates in over 15 years. Well, we were able to go in and double the rates immediately. And it's provided that facility went from not cash flowing a penny to now within 12 months, cash flowing about $4,600 a month. So this particular deal, we were able to structure seller financing where we gave the seller exactly what he was looking for on asking price. But I always say your price, my terms. So we were able to structure this deal with 90% seller financing. I got 10% from a private lender that I paid 10% interest to for a year. And essentially, we were able to get no debt service payments. We didn't have any monthly payments for the first month, so that it gave us time to increase the rates, get everything dialed in operationally. And we're projecting the value of the facility to be within the next 6 to 8 months, well north of $3 million, right? So key factors: direct mail, which is something that probably most of us do here in our single family world, and creative financing. So the power of understanding how to structure deals is super, super valuable, especially guys in the interest rate environment that we're in right now, right? Like we are communicating with mom and pop storage owners that essentially are business owners. So the conversations are a lot easier, I found, than dealing with a motivated homeowner who might be emotionally attached to their property. So those are just a few of the benefits that when you communicate with a mom and pop storage owner, it's an easier conversation and they totally get it for the most part. A few more unique advantages to self-storage. One of the things I love, guys, no tenants, no toilets, like my plumber's not getting a call in the middle of the night. I'm not dealing with evictions, right? Because in storage, we have something called lien laws. A lien law basically means that we don't have to go through an eviction process. We have to follow a certain process. And typically speaking, within 67 days, we're able to take pictures of their unit if they haven't paid, put it up online. We auction the contents, which generates a little bit of an income for us. And then we have the ability to do a unit sweep out, clean out, put it back online so that we can rent. Also, one thing that I realized is think about Americans. Americans just like to consume and buy stuff. So what does that mean? They generally speaking, they need a place to store that stuff. So when people move into a 10 by 20 or 10 by 30 unit, it's a very sticky product. And what I mean by that is when they move in, they tend to stay for years because they're paying on average anywhere between $50 and $350 a month. And for a lot of people, that's a nuisance expense. Like, it kind of stings, but like, I'll just keep paying it because it's a pain in the butt to move my stuff out. And if people downsize because the market's not doing well, they don't want to get rid of their stuff. A lot of people, I hate to use the word hoarders, but they have a hard time disconnecting from things. And that's great for storage owner operators because we provide a safe, clean place for them to keep their stuff. And lastly, guys, storage has given us, technology has given us the ability as storage owners that I would probably say 70 to 80% of this business is automated. So think of somebody coming to your storage facility and all they do is they take out their phone, they pick the unit they want, they rent it online, they automatically get text their gate code, they enter in the 4-digit code, it tells them what unit and it shows them a map of the facility, and they just roll up the door and there's a lock waiting for them. And this is after they've e-signed their lease agreement. They haven't spoken to one person yet, and they've been able to rent a unit online. This happens every single day in my storage facilities, right? And we have a third-party management center that has a call center, third-party property manager that has a call center. So if they have a question, they call the call center. So I've been in this business almost 4 years, and I've probably spoken to a handful of customers in that time. So if you like the idea of not necessarily having to manage the property yourself or be consumed on the landlord side of the business, this can be a great add-on to your existing single family business. Here's one of the first deals I did, American Mini Storage. We talk about being able to do this without any money out of your pocket. Here's another example. This particular deal came from a relationship. I talked in the beginning about how I really value relationships. And if you take nothing from this presentation, but it opens your eyes to the importance that you guys need to be communicating, interacting, and networking with each other. So always seek to give in a relationship significantly more than you ever expect to take from it. In fact, when I seek to build a relationship, I'm never expecting something in return. I'm just giving of myself. And the laws of reciprocation just naturally tend to open up. Long story short, I ended up buying that facility for just under 1.6. And you can see what we have it under contract for. This is one of the facilities that's expected to close within the next 30, 35 days. So needless to say, there's significant equity that you can realize in this business in addition to the cash flow. And by the way, none of my own money. We got SBA financing for 85% of this. And then I brought in a partner, by the way, somebody that I met in a community like this. I brought in a partner to fund about $350,000, which we needed. And then he got a piece of the deal, right? So the takeaway from this, relationships, relationships, relationships. That is going to completely open up your world, okay? Now, I said in the early on, I'm a recovered wholesaler, but I kind of lied because I ended up wholesaling the storage facility. Some of you guys might be listening to me saying, I don't want to get involved in storage. Maybe it sounds complicated, whatever. Well, the same thing you do with single family, you can do with storage. This particular deal, I ended up getting a call from a lady. So check this out. And I'm going to share with you the exact letter that I used. Matt, I sent this lady a letter over 2 years ago, and she called me in June of 2023. My family and I were getting ready to travel to Italy. She calls me a couple of days before. She said, Alex, you sent me a letter. You don't know me, but you sent me a letter. I've been holding on to it for 2 years because I wasn't sure when I was going to sell my storage facility, and I'm calling to see if you're interested. So what's crazy to me is that 2 years ago, I sent her a letter and she kept it and she called me. Well, I've experienced that in the single family world. This is the first time I was experiencing in the storage. And I'm going to show you the letter, and I'm happy to share with you the resource, the contract I use, like completely for free. So I ended up getting this facility under contract, and I realized there's a lot of text on the screen. Take my word for it. Got it under contract for $400,000. And because I didn't have the ability to assign my contract, I had to create an LLC. And then on the day of closing, I transferred 100% of the interest in the LLC over to the new buyer and ended up selling it for $550,000. So I received a wire for $150,000 on this one deal. And it just really opened my mind. It put things in perspective. Like back in my wholesaling days, I would have had to have done 8 to 9 deals to realize what I experienced on this one particular deal. And guys, I am not special. This is anything that anybody can do. I just took what I've learned in the single family space and I applied it to storage. The deal came from a direct mail campaign. I used a simple contract. It's got some different language, but essentially it's a purchase and sale contract. And then I marketed the facility to people in my network and on my list. No different than single family. Nothing super fancy or sexy about this letter, but I've underlined a few things that, based on what the seller told me, I thought were pertinent to you guys. You guys might be able to take elements or components of this mail piece and incorporate it into your particular campaign. So I asked her name was Shauna. I said, when we were closing, I said, Shauna, let me ask you a question. When we spoke months ago, you told me you kept my letter. Why did you keep my letter? There's a tip there for you guys. When you communicate with property owners, ask them why they've decided to work with you. That's going to do 2 things. From a psychology and sales perspective, they're going to resell themselves on working with you. Number 2, you're going to be able to gain valuable intel as to like, why did they choose you over everybody else that's contacted that person? And in this particular case, she told me a couple things. She said, well, I love the fact that you included a picture of your family, and the letter came across very personable, right? Like she's like, I've gotten letters in the past, but they've always come from big companies, corporations, and I just never kept those. So try to speak as if you're speaking to your grandmother. One of the things I do is I take my direct mail pieces and my marketing pieces, and I show them to my mom, who's 63 years old. I say, hey, mom, if you got this, would it resonate with you? Like, what do you like about it? What do you not? So figure out who your property owner avatar is, and then find somebody in your network, family, friend, who fits that avatar, and show them your marketing pieces and say, hey, does this resonate? Like, what do you like about this? What do you not like about this? Because that's going to give you a lot of clues that you can use to tweak your marketing. But as I'm wrapping here, guys, but think about how you might be able to incorporate this and add it onto your business. One thing that I truly believe, knowing what I know now and deeply knowing the single family space, is that this is not a distraction or a shiny object, because I've literally shown you everything I've done is what I did in my single family business. It's just a different asset class. So I don't want you guys thinking, hey, I don't have any money, I don't have any experience, because the truth of the matter is you don't need it. Now, you need to be willing to put the time, energy, and attention onto this like anything else. It's not an easy button, but it's also not complicated. Anybody on this Zoom can do this.
Thanks for listening to the DealMachine Real Estate Investing Podcast. Please leave us a review and follow along wherever you're listening to your podcast.